Hi everyone, I am Shruti and welcome to the very first edition of the weekly market update from G2 Financetech. Each week, we'll walk you through the key events that moved global markets and more importantly, what we think they actually mean. Let's jump right in. US markets, a shift in mood. We'll start in the US where sentiment took a turn midweek. Markets opened on a cautiously optimistic note, but that quickly faded. Tech stocks sold off and trade tensions made a comeback. The US announced a 25% tariff on all non US made cars, a broad move that caught investors off guard. By Friday, most major indexes were in the red. Meanwhile, we saw value stocks outperform growth for the sixth week in a row. At G2, we see this as a sign that investors are shifting towards stability and earnings visibility, especially in an environment where macro risks are front and center. Inflation and sentiment, both heading the wrong way. Now, let us talk about what's happening beneath the surface inflation and consumer confidence. The Fed's preferred inflation measure, core PCE, rose 0.4% in February. That keeps annual inflation at 2.8%, well above the Fed's 2% target, and adds to the sense that price pressures aren't cooling fast enough. But what really stood out this week was a sharp drop in the consumer sentiment. The Conference Board's expectation index fell to its lowest in 12 years, and the University of Michigan survey showed inflation expectations jumping to 5%, the highest since 2022. For us, this is more than a red flag. It is a signal that consumers are starting to feel the pressure, and when that happens, it can trickle into spending patterns and growth expectations. Europe, optimism cut short. Across the Atlantic, Europe initially looked more upbeat. Business activity showed signs of improvement, and Germany's IFO sentiment index reached multi-month high, encouraging signs at least on the surface. But that tone shifted quickly after the US announced the auto tariffs. European automakers came under pressure, and both the DAX and CAC 40 saw notable losses. The stock 600 ended the week down 1.4%. In our view, this reinforces a familiar theme even when the fundamentals start to improve. Europe remains vulnerable to external shocks, especially trade disruptions. Japan, strong base, shaky ground. Over in Japan, we saw a similar story. The Nikkei dropped around 1.5%, mainly due to weakness in auto exporters, a sector that makes up a significant share of Japan's US bound trade. The Japanese government is actively negotiating for a carve out, but for now, uncertainty is weighing on sentiment. At the same time, inflation in Tokyo crept higher, and the Bank of Japan signaled its opening to raising rates if necessary. Still, given the global backdrop, we think they'll move cautiously. China, flat market, clear message. Meanwhile, in China, equity markets were largely flat, but there were important developments behind the scenes. Industrial profits dipped by 0.3%, and at the Bao Forum, policymakers made one thing very clear. Boosting domestic consumption is now a top priority. They have set an ambitious target, lifting household consumption from 55% to 70% of GDP by 2035. That is a structural shift away from the investment and the export-led model China has relied on for decades. We interpret this as a recognition that the old playbook isn't enough anymore. Stimulus might help in the short term, but meaningful reform will determine the long-term story. Our take. So, what is our takeaway from this week? Trade risks are back in focus. Inflation remains sticky, and consumer confidence is clearly weakening. Put together, these trends are pushing investors towards quality, stability, and selective positioning. At G2 Finance Tech, we believe this is a market that rewards patience and clarity, not chasing headlines but staying focused on the fundamentals, policy direction, inflation trends, and earnings resilience. What we are watching in the week ahead. Looking ahead, here are 5 things we are keeping a close eye on. 1. The US jobs report Friday, April 4. a key test for the labor market. Any surprise could reset expectations around Fed policy. 2. The Fed speakers throughout the week. Powell, Jefferson, Cook, and others are scheduled, and their tone will matter. 3. Auto tariff decision. Expected Wednesday, confirmation or escalation could drive volatility in global equities. 4. ISM Services PMI Thursday. A real time check on the US business activity and demand trends. 5. Consumer sentiment Friday. After this week's drop, a rebound or further slide could be selling. That wraps up our first video edition of the G2 Market Update. Thank you so much for tuning in. We'll be back next week with more insights from around the world. Until then, stay sharp, stay informed, and follow G2 Financetech for more.